results. We saw those interim results out today. They reported a slight decline in first half profit. Investec has been squeezed by its exposure to crisis-hit Europe and tepid demand for credit in many of its markets. Investec ended the day 1.57% higher at 53 Rand and 47 cents. Earlier, a colleague spoke to Stephen Kosev, CEO of Investec. This is his response to some recent economic effects.
We've got a totally different model to Standard Bank in the UK. We have a strong domestic franchise. Standard Bank used the UK as a platform for their global emerging market franchise. Our main headcount would be, we have a lot of people in asset management, which is a very successful business. We have a lot of people in wealth management, which again is a successful business. And we know in the banking business, there's a whole lot of areas that in areas we did cut back staff over the last few years, but then there are other areas that we're building up. So I don't think the issues around cutting back on staff. I think the issues around when does the world get better and how long does it take to clear legacy books.
On the line for further analysis, Patrice Rassou, Head of Equities at Sanlam Investment Management. Patrice, I'm sure you heard that clip. So certainly the legacy issues that we've heard there from Investec, and the question is there indeed evidence, tangible evidence for you in these numbers of a turnaround in the numbers and the performance at Investec?
Hi, Erika. Yes, I think the one feature of the story is that the bad debts in Investec are starting to turn quite positively. So they had posted bad debts well over the 1% level, and now they're tracking at 85 basis points, which is trending towards a much more normalized level. It's not a bank which usually sits with very high level of bad debts, and they've really been caught out with their property lending that they have been doing sort of pre-2008, especially in Australia and in the UK in the private bank. So these have got to wash out of the system, and we're starting to see that. They've been extremely cautious on new loans. As you saw, the loans and advances have been growing at a very pedestrian pace, actually, on overall sort of not moving at all. So you need to have this legacy backbook wash out of the system before we see substantial improvement. But as you touched on, at the end of the day, it's a bank which is geared to economic activity, and we're not seeing that in the first world. Nothing in Europe, and very little in Australia. As Stephen says, with mining activity starting to slow down, obviously Investec will have to rebalance its business in Australia as well.
Patrice, Kevin here. Just going back to the legacy issues, how long do you think or anticipate that will take to clear?
Yes, I think the big surprise over the past year or so was how badly the Australian business was hit. We all were very familiar with the fact that the UK business, having expanded outside of London, where, as you know, the property, the residential property market had held up quite well, we only realized the extent to which they had grown their business when we saw some of the losses coming from Ireland, for instance, where they took quite a beating. But Australia always, the economy had held up quite well, and we didn't quite expect Investec to take such big losses there. And obviously they got caught out in that area, and what they did was to really clean up that book in the last 6 months. So even now, looking at the default rates that have come back quite a bit. So Australia is not an issue. The key question remains when will the UK turn around, and that's a much more difficult question to answer.
Patrice, Chris Gilmore here. In your opinion, which is the best accounting measure to use when looking at Investec? Because there's a veritable plethora of numbers that came out today. I mean, do you use HEPS? Do you use adjusted earnings, as Stephen Kosev is looking at? Which best, I think, which most accurately describes what's going on at this point in time?
Can I just chuck in a tail to that question, looking at the return on equity for Investec at 10%, so much lower than the retail banks. Patrice, are those comparable?
Yeah, I think to answer Chris and Erika, we tend to look at the tangible NAV and the return on the tangible NAV, which is very close to the return on equity. The one issue that you have is that Investec has got an interesting blend of capital-intensive and non-capital-intensive businesses. So 40% of its business is actually asset management and wealth management, which is not capital-intensive. So for these two businesses, looking at return on equity will give you the wrong picture because there's very little equity in these businesses and they look immensely profitable. But for the bank itself, the specialist bank, which is 60% of the business, I think looking at return on equity is probably the fair measure. But then you have the issue of comparing geographies because the South African business, despite all that has been talked about, has been able to deliver fairly solid returns around 14-15%, even through this recession, which doesn't compare badly with the South African banks. To come back to Chris's issue, so that's in line with what we've seen from, the ABSA, the standard banks of the world. Obviously, FirstRand's done well, but as a sort of focused corporate and investment banking business, I think that's reasonable. The problem comes from the UK and Australian businesses. There, the returns in the specialist bank have been really poor, which aggregates to that single-digit overall return on equity, and that's the big issue. The big issue is for returns in these businesses where there's been a lot of capital allocated to come back to a cost of capital. That cost of capital will be lower offshore than South Africa in terms of benchmark. So we can't expect Investec to earn like a same normalized level of return offshore as we would expect in South Africa, but that should definitely be in the double digits, not the very low single digits like we're seeing at the moment.
Patrice, thanks for your time. Patrice Rassou is Head of Equities at Sanlam Investment Management. So Chris, based on your question, I'm sure you've got some ideas on relative valuations and how attractive Investec might be.
It's a funny one. I mean, I love the company, the management are great, but I think, and I don't mean this in a derogatory way, but I think you need to have much more of a sustainably buoyant global economy, and particularly UK economy, for that thing to really fly. So I think it's going to be treading water now for quite some time.